dislocations. But the opposite lesson seems to have been learned, that we can keep spending, whatever we wish without worrying about a day of reckoning. And I just, I'm very concerned about the day of reckoning and what risks we're laying for the economic well-being of future generations. And I just wonder, your thoughts on those concerns and, the potential timing of that day's arrival and its consequences, and whether you have any ideas about how we can build a real constituency for fiscal responsibility in America.
So I do share those concerns, and in fact, I was working on those issues before I joined the Fed. But at the Fed, my position needs to be that fiscal policy really is the responsibility of Congress and the administration. Wouldn't be appropriate for me to comment too much on specific policy proposals or laws. More to the point, with inflation running so far above 2%, this is probably an especially good time to focus on achieving our own mandate rather than doling out advice to others. But like my predecessors, I'll point out that our federal fiscal policy is not on a sustainable path, and it really hasn't been for some time. And we will need to get back to a sustainable path sooner or later. To your point, sooner is better than later. And I guess I'll just leave it at that.
All right, thanks. We're getting close to the end of our time, so I'm thinking about a closing question. I wonder, with everything that we've discussed thus far, what are some of the key lessons that you've learned since you became Fed chair, and what advice might you give to a lot of the young, monetary scholars out there that Cato and other places are working to develop?
So I guess I would say that both experience and also studying history are great teachers of what can be hard lessons. And I actually mentioned 3 lessons at Jackson Hole 10 days ago, and those were first that the Fed does have and accept responsibility for price stability. Even now, some are questioning that, but that to us is settled. Secondly, that inflation expectations are really important and need to be carefully monitored, because if they do move up, they can make the job of getting back to price stability so much harder. And third is that, the record is there is a record of failed attempts to get inflation under control, which only raises the ultimate cost to society of getting under control, hence the need to do this job now and keep at it. So those are 3 lessons. I would say more broadly, another really fundamental lesson is that the structure of the economy is ever changing and highly complex. And, we see that today around the world. Many nations are experiencing the first high inflation in 40 years all around the world. Different countries have different composition and backstories, but it's really quite global. And the question really is this going to be a temporary thing that's really related to the pandemic in some way, or is there actually something more structural and persistent happening? For example, if we're moving to a world where we're going to see more frequent, larger, and more persistent supply shocks for whatever reason, that will have critical and difficult implications for the conduct of economic policy and monetary policy in particular. So this is not possible to know right now, but it's certainly a question that looms. I mean, to sum it up, I would just say economics is not physics. There isn't any specific temperature at which the economy boils over. It does boil over from time to time. And when that happens, it often takes many years of analysis, discussion, and debate to reach general agreement on why that has happened. So the point is that we are always making monetary policy under high uncertainty about the structure of the economy and the path ahead. That makes our work challenging. It also makes getting it right very important for the people that we serve, and we do think about that every day. So our understanding of the economy has to evolve. As the economy evolves, as time passes, we do learn more, and I think it's okay to follow the evidence and change one's mind. I think advice to scholars young and old is that people shouldn't be afraid to say that they've changed their view and explain why. I actually find that refreshing when people say, my view has evolved in the face of the evidence. I guess one more word to close for those young researchers you mentioned, and this is a commercial for public service and for the Fed. So the Fed is a very special place where people can combine policy research with policy making. This is a place that has, all of us have a very strong sense of mission in our work, which is very satisfying. And that mission is to serve the public. And it really matters. Our work really matters to the public. I would say there's no higher calling or more satisfying mission. So I hope that young researchers and economists and others will consider public service as part of their career. For me, it's been only a part. But in particular, consider working at the Fed, where you'd be most welcome.
Thanks for that. I mean, I share those sentiments. As you know, you mentioned your work at the Bipartisan Research Center, and you know, I'm at Cato because I care about the future of our country and the future, of course, of liberty and freedom in America, and for the kind of world you know, future generations are going to grow up in, whether they're going to have the same opportunities that we all have had to live in a free country and to pursue, you know, their American dream, and being part of that is a real privilege. I know, you know, at Cato we work very hard to raise consciousness of monetary policy and the potential for monetary reform. We wish that, you know, we think this is a very important topic, and that more Americans should pay attention to it, even though it's complicated. We wish there were more policy organizations that would prioritize this policy area and you know, raise their level of resources dedicated, you know, to this area. And as you know, Mr. Chairman, you know, Cato is not shy about being critical, and we enjoy intellectually jousting with you and your team. But we also recognize that you know, we share common you know, goals and objectives for our country, and it's in the country's best interests, by which that jousting and those debates and areas of disagreement, it's within that context that they occur. And so I do thank you for your work. You're in a challenging position, and I thank you very much for being part of this conference today. It's been a real pleasure.
Thanks, Peter. The pleasure is mine too.
Thanks so much. And with that, I'm just going to let all the viewers know that we're going to be taking a break now until the top of the hour. So we're going to reconvene.
Been listening to the chairman of the Federal Reserve. I still can't believe that the moderator's son-in-law is the Bitcoin guy from that Janet Yellen, Humphrey Hawkins testimony a long time ago. From New York City this morning, good morning to you all. Your equity market looks a little bit like this. We're down about 1/3 of 1% on the S&P 500. In the bond market, at the front end, yields climbing in both Germany and in the US as well. On a 2-year, we're up by about 4 basis points. On a German 2-year, we're up by about 12 basis points. In the FX market, euro recovers just a little bit, still negative 0.2 of 1% on euro dollar, 99.83. Got to do two things: talk about what Chairman Powell just said in the last hour, and pick up on the end of that news conference with President Lagarde in the last 10 minutes or so. For the Fed chairman, very, very much focused on re-anchoring inflation expectations. Take a listen to this.
We need to act now forthrightly, strongly, as we have been doing, and we need to keep at it. And my colleagues and I are strongly committed to this project, and we will keep at it. It is very important that inflation expectations remain anchored. The clock is ticking. As I mentioned, the longer that inflation remains well above target, the greater the concern that the public will start to just naturally incorporate higher inflation into its economic decision making.
Mike McKee, the clock is ticking.
Yeah, except that in this appearance, perhaps the Bitcoin guy story is the only thing that qualifies really as news in terms of what would move the markets. The chairman was not asked and did not discuss what they're going to do at the September meeting. However, he did reiterate that they will keep at it, keep raising rates until the job is done. They don't take politics into consideration. They will not be bowed if Congress starts to put pressure on them because the economy is slowing, and he reiterated they want a period of growth below trend. That's maybe code for getting close to a recession, but not a recession. Now, Cato is a proudly libertarian organization that would like rules-based monetary policy making. Powell was asked about that, and he said no, particularly nominal income targeting, which Cato supports, is not the right formula. And he noted a sort of a new metaphor that monetary policy is not physics, and there is no precise temperature at which the economy boils. And he said the Fed does not need to drop, Congress does not need to drop the employment part of their mandate. They're satisfied with their dual mandate. He was asked about cryptocurrencies and said they're a long way from deciding whether they would issue one, but they would not do it without Congress specifically authorizing it, John.
I'm still questioning the schedule for this Fed chair this morning, the counter-programming with the ECB chief. Anyway, Mike McKee, thank you, sir. The ECB president had a lot to say. What a tough, tough spot for Christine Lagarde. Upside risk to inflation, downside risk to growth. Take a listen.
That downside scenario differs from the current situation in that it includes, in particular, total shutdown of all Russian gas supply. Well, we're almost there. There's still a bit of flow going through the Ukrainian ones. But we also foresee rationing across the whole euro area and no measure of compensation between the shortage of gas supply and other alternative sources of supply. It's a really dark downside scenario, but it's one that concludes to a 23 recession.
Very happy to welcome back Maria Tadeo from Frankfurt outside ECB headquarters. Maria, the president got defensive at times about the forecast. Walk us through it.
She did, and I was very surprised by the language here. She was asked, there has been numerous issues now, numerous mistakes made to those forecasts, and she said, I take responsibility. I'm the head of the European Central Bank, but how would you forecast a pandemic? How would you forecast a war? And how do you forecast Russian blackmail? Nonetheless, that is her job, essentially, and every time they make mistakes, that is a problem for the credibility of the institution. Also, Jonathan, going back to your question, because I know this is something you took to heart, the fact that there was no reference to recession. She then went on to say there is a stressed case scenario that could perhaps culminate with a recession, but it's not the base case scenario, for the European Central Bank. And this is something the European officials will cling on tooth and nail. This idea that they still have cards to play and that they can still salvage this economy from a recession. When it comes to rate hikes, 75 basis points, she said it was unanimous and in some ways brought back the forward guidance. She said there could be more hikes to come, 2, 3, 4 meetings, less than 5.
Maria, thank you. In Frankfurt, Germany, a windy Frankfurt off the back of a 75 basis point rate hike. Your equity market just reversing losses a little bit. We're down about 1/10% on the S&P. The coverage continues. Thank you very much for choosing Bloomberg TV from New York City. This was the countdown to the open. This is Bloomberg.
the financial centers of the world. This is Bloomberg Markets with Alex Steele and Guy Johnson.
It is 30 minutes into the U.S. trading day on this Thursday, September 8th. Here are the top market stories we're following for you at this hour. ECB's jumbo hike. The central bank hiked 75 basis points. Christine Lagarde says it's not the norm. Don't get used to it. And the UK's turn now to fix the energy crisis. New Prime Minister Liz Truss unveils a huge package to protect households and companies from soaring energy bills. Is it going to work? And Powell's promise to pummel inflation. Fed Chair Jay Powell commits to anchoring inflation expectations. Markets almost fully priced a 75 basis point hike for September. From New York, I'm Alex Steele with my co-host in London, Guy Johnson. Welcome to Bloomberg Markets. Guy, I almost had like whiplash looking at the two feeds of Powell and Lagarde, both of them quite significant and both of them sounding quite hawkish.
Incredibly hawkish. In fact, the ECB sounding very, very hawkish today. Christine Lagarde, just her body language as she walked out, de Guindos's body language as he walked out, looking much more serious than they have done over the last few meetings. And the message was really quite a stark one, it has to say, from the ECB. We are hiking today by 75 basis points, and we will do more in the future. A significant upgrade of inflation, a significant downgrade of the growth outlook from the ECB. So a busy few hours, as you say, Alex, for central banks. Remarks from both the ECB President, Christine Lagarde, at the press conference in Frankfurt, and then also the situation developing with Jay Powell. Let us take a listen to what they both had to say.
The Governing Council today decided to raise the three key ECB interest rates by 75 basis points.
We need to act now forthrightly, strongly, as we have been doing, and we need to keep at it until the job is done.
Price pressures have continued to strengthen and broaden across the economy, and inflation may rise further in the near term.
The longer that inflation remains well above target, the greater the concern that the public will start to just naturally incorporate higher inflation into its economic decision-making. And our job is to make sure that doesn't happen.
Let's break down the takeaways now. Joining us from New York, Mike McKee, our international economics and policy correspondent. And joining us from Frankfurt, outside the ECB, Bloomberg's Maria Tadeo. Maria, let's start with you. The key takeaways from Lagarde's press conference and the announcement we got before.
Well, it's a 75 basis points, Guy. She said this was unanimous. There was a discussion around the table, but ultimately it was a unanimous decision. You alluded to this earlier. This was a hawkish ECB. She said inflation, quote, is a terrible phenomenon, and we have to deliver on our mandate, which is price stability, and we will do so. She also said, and to me this was interesting, because it did seem that to some extent she's bringing back the forward guidance. She said there's more rate hikes to come, potentially in the 2, 3, 4 meetings, less than 5. And then the other thing, of course, to me that was interesting here out of this is that she was very defensive when it comes to the forecast. There has been a lot of criticism that the European Central Bank keeps getting them wrong when it comes to inflation, but also growth. And she said, well, I take responsibility, but how would you forecast a pandemic? How would you forecast a war? And how would you forecast an energy blackmail from Russia? So nonetheless, defiant still over those projections, which is you believe the market today will tell you they're very optimistic. The fact that you're not predicting a recession is in some ways wishful thinking.
What did she say then? I know you mentioned the 2 rate hikes versus 5 meetings, etc. What did we learn then about October and then November?
Well, this is the thing. She gave this timeline, which I was surprised because remember, at the start of the press conference, she said this is going to be meeting by meeting. It will be led by data. And in the previous meeting, essentially, she killed the forward guidance, saying that, of course, it's a very volatile situation, so they have to assess this almost on a monthly basis. She did not commit on any specifics, but did say 75 basis points is not the norm. She was asked them, would you rule it out? She did not on that respect either. So there was, the ECB is keeping options open here. Perhaps a lot of this given to the volatility that comes with the energy market, which still she acknowledges is a problem when it comes to the projections and the modeling around inflation. And then again, going back, because to me this was quite striking, she went again and repeated our base case scenario, excuse me, is that we can still avoid this recession by the end of the year. The market believes the European economy will fall into one, but she did say we could get a situation where the winter is not very cold. There's a number of things the European Commission says it can do to bring down gas and electricity prices and just by a neck avoid this recession.
Mike, in terms of how this changes the narrative for the Fed, let's just talk a little bit about that. The ECB has gone big. It is signaling that it's going to be hawkish going forward. Does that change the narrative in any way for the Federal Reserve and Jay Powell?
No, because they're going to make monetary policy based on what's best for the United States. Now, having additional credit tightening around the world is going to help with tightening overall. So it's a benefit to the United States and to the Fed. But it's also going to be interesting to see what continues to happen going forward in currency markets. The euro falling on today's news from the ECB, and that, of course, strengthens the dollar, which has knock-on effects into the United States. So that's something to keep in mind, to keep an eye on as things go forward. But Powell made it clear today they're still on the same course they have been, basically reiterating everything he said, although, as I noted earlier, he was not asked about and did not talk about what they might do in September. But right now, the market is pretty much priced in 75 from this central bank as well.
Did we learn anything new, Mike, in terms of Powell, in terms of his tone? Anything stand out to you?
We were laughing about it earlier. Only thing about the Bitcoin guy holding up the sign in back of Janet Yellen a couple of years ago turned out to be the moderator's new son-in-law. Other than that, no, nothing new from Powell today. He basically said they're going to stay the course, continue on until they get the job done. In other words, bring down the inflation rate, and that they will be flexible and do what it takes to get it down. They could adjust the QT process if they need to. Ruled out any additional change to the Fed's mandate, ruled out using rules instead of discretion. Pretty much things he's said before.
Maria, you are going to be going from the ECB to the energy conference that is going to be taking place tomorrow. Lagarde today talked about the idea that fiscal stimulus could be inflationary. Is she making a difficult decision today without an understanding of what the ultimate policy response from Europe is going to look like when it comes to trying to calm the energy markets that are so embattled right now?
And it's funny because if you follow Christine Lagarde, she always says there needs to be fiscal support. She always talked about fiscal. Remember, right before this energy crisis hit, today she had a different tone. Essentially, she talked about fiscal support that is needed, yes, but it has to be targeted and it has to help the most vulnerable, because if you go broad-based, then you could be in a situation where it becomes inflationary. I guess, Guy, just the fact, the choreography here, that today we're at the ECB, this is about the monetary policy, but tomorrow we'll be in Brussels dealing with the energy, does tell you that the politics, the geopolitics, the energy, inflation, the economy have essentially now become a single story for European officials. Tomorrow will be very important because it will tell you a lot about what that fiscal stimulus could look like, what that intervention in the energy market make look like, and that could make the job for the ECB easier, or actually, in fact, harder. If you look at countries like France, they've now decided that this will be broad-based until the end of the year, and they won't go into potentially revising that until 2023. So, of course, this remains in many ways still a political government decision.
Yeah, and as you mentioned earlier, just Christine Lagarde getting really defensive about that because she can't dictate energy policy. Guys, thanks a lot. We really appreciated Bloomberg's Michael McKee and Maria today. Looking forward to your coverage tomorrow as well. So coming up, what will the impact of the ECB's jumbo rate hike be? We're going to ask the head of macroeconomic research over at Pictet Wealth Management coming up next. This is Bloomberg.
I'm Kaylee Line.
And I'm Damian Sassower. Join us each week on our brand new show, The Lineup. If you're betting on the Mets, it's a pretty good return.
We'll cover the latest trends in sports betting, the hottest matchups, shifting spreads, and the data you can't find anywhere else. It is crazy how much the money line has changed from the preseason to now.
Plus, expert insights from special guests.
The Eagles got a gem on their hands. I hate to say it because they're in the NFC East.
Right,
with the Giants.
Odds are it'll be your favorite way to stay in the game.
Catch The Lineup Fridays and Saturdays only on Bloomberg.
Today's meeting had two interesting things. First of all, it highlighted the 75 basis points hike as front-loading. And secondly, it kept on reiterating that meeting-by-meeting approach. There is still an enormous weight on the growth outlook.
That was Vasilios Giannakis of Citi reacting to the ECB's 75 basis point hike today. Now with us for reaction is Pictet Wealth Management Head of Macroeconomic Research, Frederic Ducrozet. Frederic, thank you very much. We appreciate it. Your reaction to the press conference and what the ECB did.
I suppose not that big of a surprise, given that the decision to hike by a larger amount, potentially 75 basis points indeed, was well communicated, telegraphed, including by Isabel Schnabel in her Jackson Hole speech, which was very strong in terms of, defining the new reaction function. If there is any surprise today, it's about the details, mostly about the remuneration of bank reserves, of government deposits. There's a bit of a surprise here, which is mostly supportive for the banking sector, by the way, but that's really a sideshow, a technical thing. And I think my main takeaway actually is that given the situation with high inflation, high risk to growth, to inflation expectations, to basically everything, the ECB just wanted to get away with this big rate hike and discuss everything later on this year because precisely of this unusual uncertainty.
The euro is down. Why?
By the rumor, sell the fact, I guess the ECB was not more hawkish incrementally than what we could have expected, including in terms of guidance. That's a bit of the irony of the situation. Forward guidance was terminated in July. That's what the ECB told us. And yet today, we got much more guidance than what we were expecting, actually. Christine Lagarde said that the ECB was likely to raise policy rates further over the 2, 3, or 4 next meetings and implicitly then stop. And I think that's part of the explanation, that we might not get an over-tightening, the ECB not moving into restrictive policy, and that's a big difference with the Fed, I think.
It is, and I'm confused by it, to be honest. That's also assuming that we're believing their economic projections on growth and on inflation. Do we really think in 2 years inflation is going to have a 2 handle? Do we really think that next year we're not going to be in a recession in Europe?
Again, I think the situation is very different from the US. The bulk of the inflation is imported by the energy shock, by the weaker euro also, by the way. There is a broadening of price pressure, certainly. Core inflation at 4.3% is way too high for the ECB to tolerate, and there's a risk for inflation expectations also to get de-anchored. But the slowdown has started in Europe. The ECB expects more pain down the road, and they also want to dampen growth further. So I suppose, again, the medium-term outlook for inflation looks very different in the euro area. If you have a better, some surprising good news and a stabilization in the energy sector, then indeed the ECB might think again and perhaps resume rate hikes. But that's not where we are today.
Frederic, how much control does the ECB have over the Eurozone economy right now?
She would admit, the president herself, that the control is fairly limited in terms of inflation, in terms of activity. The big show, as you just said, is probably on Friday, tomorrow, with the EU Council, with the energy sanctions, support measures that are likely to be implemented. The timing and the details of those measures will be more important, in my opinion, than monetary policy. But again, the ECB has no choice but to act. It's all about their credibility. That's what she said also very explicitly. They have 2 choices. One is to do something now, preemptively front-loading rate hikes with some pain and some costs involved. The other one is being too cautious, perhaps too late, And it's worse because there will be more pain and more tightening down the road. So they made their choice, I think.
Well, and I think that also to Guy's point, how will the transmission effect be of this rate hike and the future rate hikes? You mentioned a little bit of this right at the top. Will every part of the economy feel this, or do they have to shape their transmission mechanism a bit better?
Yes, and again, the euro area is very different from the US from that perspective. There is obviously still a risk of fragmentation. Italy is in everyone's mind, and for good reason. So the ECB will continue to use the balance sheet, the flexibility of PEPP reinvestment, and potentially their new anti-fragmentation tool down the road. They also need to think about the banking sector, and we're back to basics in some way. This decision today, again, I was expecting, and the market, I think, was expecting some sort of new system to reduce the benefits of higher rates and bank reserve remuneration for banks as opposed to TLTRO, for instance, and this was not decided. And I think the main reason perhaps is they want to make sure, indeed, that policy and monetary policy is being transmitted to the real economy. Lagarde said something very true, I think. She said in TLTRO, there is a T, like targeted. This was in place for a purpose, for a goal, which was for banks to lend to those small and medium enterprises and households that need it. And it will continue to be the case, even when the ECB hikes policy rates.
So how high do you think they ultimately will have to hike? This is front-loading. Let's describe this as front-loading. What does that tell us about where neutral is, and she was asked about this, and where the terminal rate is?
No one knows. They don't know, so they will admit it. And apparently they won't, be more specific about it. We had some comments in the past, including from French Governor François Villeroy de Galhau, who said the neutral rate should be around 1 to 2%. Probably some hawkish members think it's above 2%. Time will tell. I think the growth conditions will really dictate to which extent actually the ECB can go and how fast she can go to neutral. My guess is 1.5%, but honestly, the conviction is not very high at the moment.
So Italy 10-year BTPs are trading just shy of 4. Christine Lagarde seemed to say very clearly, yeah, I think the bond market has it right now. Are they worried of 4%? This is the level where they seem to always freak out. Is this a danger zone for the ECB?
It is, but I don't think there is any sense of panic on the ECB side. First, very importantly, they put their money where their mouth is during summer. And they did use this flexibility of their balance sheet to, I think, the largest extent possible. And that's very telling because they don't want to use the TPI. They don't want to use this new tool that is like OMT. They would like just to have it in store and say whatever it takes and not have to activate it because obviously some political issues would probably limit their interventions. And again, 4%, the government, and Italy is no exception, have used the long period of low to negative rates and QE to extend maturities, to lock in some very favorable interest rate. I think it takes time, probably a couple of years, before it really bites into the debt sustainability and constraints of the Italian government. It's not good news, obviously, that BTP yields at 4%. That's not what I'm saying. But you would need to stay here, if not slightly higher, for some time before it becomes a bigger problem for the ECB, I think.
Frederic, we're going to speak to Peter Praet in the next hour, former chief economist at the Bank of England. Philip Lane appears to be all over the place at the moment. These forecasts are changing and changing significantly every time we get an update. How much of a handle does the ECB have on what is happening around them? Why aren't the models working?
To be honest, the ECB is the most transparent central bank in the world, in my opinion, about that problem. They immediately admitted the problem, the fact that most of those models are mean reverting by nature, that there is something to address, and they are looking into it. They publish a paper, more or less, making their mea culpa on that. Did the Fed do that? Did the Bank of England do that? The Bank of Japan do that? I don't think so. So I think the ECB is really genuinely looking into this problem and trying to address it. No one saw this inflation surge coming. No one predicted a war. And that's honestly not something I would blame on the ECB, at least first and foremost.
So that would imply that her defense that she said about that would make sense. Before we let you go, you mentioned how different the ECB is from the Fed right now, and the dollar index would tell you that is so true. The dollar keeps grinding higher, and I'm wondering, how high can it go and what breaks first?
It's very much on the U.S. side. I think that's got the clue in terms of, when the Fed will pivot, essentially. That's most likely to be the main driver. On the euro side, the correlation is still very high with gas prices. So if we get the fix, if we get some better news, this might help. I don't think it's about the ECB hiking by 50, 75 or more. It's really about the growth outlook. And the day, if and when we finally get some improvement, to me, the euro should trade around 110, 115 at some point, closer to fair value next year rather than parity. And that's really a matter of timing and the energy crisis more than monetary policy right now.
Got to get through the winter before then. Feels like a way away. Frédéric, thank you very much indeed. Always appreciate your analysis. Thank you very much. Frédéric de Crousaz, Pictet Wealth Management, Head of Macroeconomic Research. Great stuff. This is Bloomberg.
Wall Street prepares for the latest read on inflation.
Things are moving. The news flow is extraordinary.
Will headline inflation continue to ease?
The totality of the data has been better than expected.
Very positive movement on inflation.
Instant reaction on Bloomberg Surveillance.
This is a new era, and it is one of the most pressing concerns facing us.
And what it means for the Fed.
If inflation fever is breaking and economies keep softening.
They are on track, perhaps, for that soft landing.
Inflation in Focus, Tuesday on Bloomberg.
It's time for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. And Tesla's operations in China are back in full swing after a factory upgrade and a lockdown slowed production. The electric car maker delivered a near record 77,000 Chinese-made vehicles in August. That is a sharp rebound from the 28,000 that were built in July. Shares of GameStop are higher. The video game retailer has announced a partnership with cryptocurrency exchange FTX US. That suggests the company is making strides in its strategy shift to non-fungible tokens. Meanwhile, GameStop reported a second quarter decline in sales and a wider loss. And there was just one major surprise at Apple's latest product unveiling. In one of the worst years of inflation in decades, the company isn't raising prices. Apple introduced the iPhone 14, new AirPods Pro earbuds, and a new Apple Watch. The iPhone retains the general look of the older version, whilst getting an improved camera and a satellite messaging feature. And that is your latest Business Flash. Alex.
Great, Jurgita, thank you very much. Coming up, Fed Chair Jay Powell underscoring the central bank's hawkish stance. We're going to speak with former Federal Reserve Governor Randy Kroszner. That is coming up next. And in the markets, you're looking at an S&P that's now pretty much neutral on the day, racing in the earlier declines. The Nasdaq 100 up by 0.1%. A couple things to pay attention to. One, the short end of the curve, yields continuing to move higher, but nowhere near the move that we're really seeing over in Europe. And the dollar. Where will that top be in the dollar? We were just talking about how until the Fed pauses, it's going to be really hard to find that top for the dollar, and that's going to put pressure on emerging markets as well as other G10 currencies. Just take a look at the euro now below parity, but besides that 75 basis point hike. And just one thing to point out here, oil kind of rebounding after 2 days of declines where it was down about 6%. Just watch that space. That obviously is going to be a huge indicator in terms of inflation and where central banks are going to have to go. But that dollar is still stronger, 0.3%. This is Bloomberg.
This is Bloomberg.
We're about an hour into the U.S. trading session. Stocks pretty much going nowhere. Bloomberg's Abigail Doolittle is tracking the moves. Abigail?
Yeah, truly, Alex. We basically have these indexes unchanged on the morning. The S&P 500 and the Nasdaq, though, notably both off of the lows. Right now, the S&P 500, as you can see, fluctuating. It looks like the Nasdaq will be doing that soon. A bigger move for the 2-year yield, and yields overall climbing higher. This, of course, as we have Fed Chair Jay Powell today reiterating the hawkish move, the ECB raising by 75 basis points. So most central banks, BOJ, the one notable exception, are in hawkish mode, and that seems to be the message that we're seeing in yields rising as traders try to catch up once again, such dislocated markets. Dislocation perhaps too with oil going up, down, mainly down recently, but today we have an up day, up 1.8% right now at 83.41 for WTI crude. If we take a look at what happens for stocks though this year after we have big gains, because of course, yesterday we had that big rebound rally. Typically, the momentum does not hold. These are the days after big moves to the upside this year. And there was one day back in July in the middle of that rally that we did have a nice gain after a big up day. But the last one was up 0.4%. But overall mixed moves right now. Today's action fits that basically unchanged. As for where we have big moves, that of course is in the currency arena. What we're taking a look at here is the euro versus the dollar versus the yen, and the pound versus the dollar. And the point here is all are down sharply relative to the dollar. Of course, we have that yen dollar right around 144. Actually, excuse me, that's the dollar yen at 144. The yen hitting its lowest since 1998. The pound at its lowest since 1985, and then the euro below parity for the first time in about 20 years. So big weakness here, which is interesting. It suggests that the Fed is considered to be the most hawkish of the central banks. And then finally, in terms of what's helping stocks climb here in the U.S., or at least fluctuate, move toward the upside, it's all about the bank sky. Take a look at the KBW Bank Index, that regional bank index of 1.8%, in line with yields rising. But we can see that some of the big money center banks are also higher. JP Morgan, Bank of America, and Citigroup all up about 2% or even more.
Banks having a pretty good day over here as well as a result of the ECB. Abigail, thank you very much indeed. Let us return to the Fed. Jay Powell repeated the central bank's hawkish stance in remarks earlier today in Washington. Let's take a listen.
History cautions strongly against prematurely loosening policy. I can assure you that my colleagues and I are strongly committed to this project, and we will keep at it until the job is done.
Joining us now for analysis, Randall Krosner, former Federal Reserve Governor and a University of Chicago professor. Randy, let's talk about this. Canada went 75 yesterday. ECB's just gone 75. Do you think we're still on track for another 75 from the Fed?
I think it's very likely. You heard Jay basically give almost exactly the same message that he gave at Jackson Hole. You've heard other Fed speakers come out and say that they certainly would be comfortable with 75. Obviously, there's going to be some more data that will come out between now and the meeting, but I think they're on track for likely 75.
So if that's the question, okay, September 75, is the right question to be asking what happens in October and November? Goldman just upped their October forecast to 50 from 25. What do you think?
So I think that's exactly right. I think the thing to do is look at the path where they're going to get to at the end of this year, beginning of next year, because that's where they're going to hold for a while. Because that was the other message from Jackson Hole, and that he reiterated. They're going to keep at it till the job is done. What that means is there's not going to be a quick pivot back down. Inflation hopefully will be coming down quite steadily, and I think we'll be getting closer to the Fed's target, but not at the Fed's target. But they're going to hold rates, I would say, into the 4% plus range for much of 2023, because they want to make sure that inflation stays down.
What does staying down look like? We're going to get some CPI data soon. We've got gas prices coming down. What are we looking at in terms of understanding the totality of the data that the Fed is looking at?
So the Fed does look at all these different pieces, but the key piece, if you're going to look at one piece, would be the personal consumption expenditure index, not the CPI, but the thing that comes out when the GDP report comes out, and also in particular the core number, so stripping out the volatile food and energy sectors. Because they see that the core PCE tells you a lot about where inflation is likely to be going, and that will I think that will gradually be coming down. Although one of the biggest factors affecting the core rates are rents, and rents haven't started to come down yet.
Randy, how do you describe the difference between the ECB and the Fed when it comes to fighting inflation? I'm trying to get an understanding as to which inflation in which region is going to be harder to bring down. Because on the one hand, in Europe, it's much more exposed to energy prices. But if energy prices come down fast, that could resolve faster than the Fed.
So certainly they are facing much more challenges in energy. I mean, the U.S. is a net energy exporter. Obviously, Europe is highly dependent upon Mr. Putin, and so it is a very different kind of situation. The ECB has been much slower to react than the Fed has. The Fed started in March. Now that was probably too slow, and I think the Fed has admitted that. But the ECB has been even slower to react. There's going to be a lot more volatility related to energy as well as food prices. So I think you have to look to core inflation, which is still quite high in Europe.
Randy, when does the dollar become a problem?
Famously, a Treasury Secretary once said, the dollar is our currency and your problem. So obviously, it's a challenge for a lot of countries right now. The dollar is very strong because the Fed has been on a stronger path, a more rapid path to bring rates up than most other central banks, and that's one of the key things that has been leading to dollar strength and weakness in other currencies. I don't think it's a major problem for the U.S. It depends on the particular countries, and especially I'd be looking at currency mismatches where people have a lot of exposure in dollars, but they're getting their the resources in the local currency. That's when you can get currency crises. That's when you can get bankruptcies and disruptions. So I'd look carefully country by country and firm by firm for those currency mismatches.
Well, where's the biggest? I should point out that our question of the day yesterday was our currency, your problem. So we're definitely on the same page with you. Where do we see the crisis start to unfold?
Well, it's possible that in some emerging markets where they have a lot of debt outstanding and there's a big mismatch. So far, we haven't seen anything that's disorderly. We've seen some rapid movements, but I think nothing disorderly in the markets. But as you know, if it is the case that the local currencies continue to weaken relative to the dollar, that makes a problem much more likely.
And in that scenario, is the Federal Reserve central banker to the United States or central banker to the world?
Well, the formal mandate for the Federal Reserve, as for all central banks, is a domestic focus. It's always about there's an inflation mandate, either self-imposed like at the Fed or at the ECB, which is given by the Parliament, of what they're supposed to be doing, and that's domestic. Same thing related to economic activity. That said, the Fed as well as the other central banks take this into account. The Fed understands that its actions will have international implications, and those then feed back into the U.S. So it does take it into account, but a more indirect way.
Randy, I've mentioned energy before. Tomorrow, European energy ministers are meeting to discuss plans. Liz Truss unveiled her energy plan today to help shield households and companies from rising electricity costs. Are these good things to be doing, or is it going to prolong this energy crisis that we're in?
Well, this is one of the challenges of, I think I fully understand the motivation of trying to try to help out households who are facing incredible challenges. I mean, dramatic changes and very rapid changes in energy prices, food prices, overall cost of living. I think the most effective way to do it is to try to provide support to those who are finding households that have the most challenges. Broad-based price caps or price changes or price limits maybe not the most effective way to do that, because if you think about the distributional implications, it's often wealthier people who are using a lot more energy, who are using a lot more of these things. What you want to do is probably target this more on the households that are facing the most challenges.
Is monetary policy and fiscal policy on the same page in Europe, do you think, and more broadly around the world? Christine Lagarde talked about this a little bit earlier. She hinted at it. She talked about the idea that some of these fiscal impulses could be inflationary. In fact, you could argue that much of what we're witnessing right now stems from that. If we are to see a big round of fiscal stimulus in Europe, will that be inflationary?
So it depends on exactly how they spend the money, but it can be. And this is a challenge because you've got, exactly as you said, there's a tension right now that a lot of fiscal support coming in, and understandably because households are suffering, but we have very high inflation, and so central banks have to try to pull the inflation down. Also, as you said, there'd been an enormous amount of fiscal support in the pandemic, which I think was reasonable, but a lot of fiscal support post-pandemic, which I think is much more questionable, that has led to higher demand than otherwise would be the case, and when supply and demand aren't meeting, there's only one way for make them meet is prices start to go up. So I think this is going to be a bit of a clash, and the ECB has a particular problem because they've created this transmission protection instrument, the TPI, to buy assets if, for example, they feel that the yields on Italian debt are going too high. And so they've got a bit of a challenge because they're trying to tighten monetary policy. At the same time, they may be buying Italian debt and other debt of other countries.
Right. And we don't even know the specifics of that yet. It is truly confusing. Randy, thanks a lot. We truly appreciate it. Randy Kroszner, former Federal Reserve Governor, joining us. All right, coming up, Amazon's $13 billion bet on the National Football League. We're going to take a look at just how much of a game changer this is for America's biggest and richest sport. This is Bloomberg.
Keeping you up to date with news from around the world, here's the first word. I'm Ritika Gupta. President Biden will host a video call with allies today on support for Ukraine. Amongst those taking part, the group of 7 leaders, along with leaders from the European Union and NATO. The call is taking place at a key moment in the war. Ukrainian forces have launched a counteroffensive against Russian troops. Meanwhile, Vladimir Putin meets with China's Xi Jinping next week. The UK's new Prime Minister says there are no cost-free options to resolve the global energy crisis. Today, Liz Truss unveiled a sweeping package of measures to contain those spiralling energy bills. It will cap the amount that consumers pay for natural gas and electricity. By one estimate, that could cost the government up to $230 billion. But officials say it will cut inflation by 4 to 5 percentage points. Meanwhile, doctors for Queen Elizabeth II say they are concerned for her health. A statement from Buckingham Palace says that the British monarch is under medical supervision at her castle in Scotland. Queen Elizabeth is 96 years old. She was seen earlier this week meeting with the new Prime Minister. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg, Guy.
Ritika, thank you very much indeed. We'll continue to monitor what is happening at Balmoral. In the meantime, let's get back to some of the business news. Amazon has breached American television's last big stronghold. It's now the first streaming service ever to obtain exclusive season-long rights to the NFL, the National Football League games in the United States. With us now, Geeta Ranganathan, media and advertising analyst for Bloomberg Intelligence. Geeta, just put this in context. Over here in the UK, I've been watching football, I've been watching tennis, rugby, etc. on Amazon for really quite some time. How big a step forward, though, in the United States is this for Amazon?
Yeah, so thanks guys. So Amazon has had some streaming deals in the past with the NFL, but those were all really small. This is the first time that they are getting access to a major football package, the Thursday night football package. And so this is really a watershed moment, I think, for the whole media landscape, because they are now going to be broadcasting to an audience of about 20 million or so on average watch these NFL games. So it is definitely a very, very big deal.
It's huge. It's $13 billion deal. What does Amazon hope to get of this? Like, are they going to hope that people buy toilet paper on their website because of this, or that they're going to go be a Prime member? Like, what's their end game? How do they make money off of it?
Oh, there's so many ways that they're going to make money off of this. They're getting more and more people really onto their ecosystem. So one thing, of course, is the Prime subscriber base. So this is one way to kind of reinvigorate that whole Prime subscriber base. It's about 200 million global members, obviously about more than 120 members here right in the US. So get more people to Prime, get more people to spend time on Prime Video, thereby kind of offering more of a captive audience to advertisers. So they are trying to break into the TV advertising market, which is a $60 billion advertising market, and this really kind of gives them those inroads into that market. They already have a robust advertising business, by the way. Amazon makes about $30 billion in advertising, but this kind of opens new doors for them. And then, of course, selling more products, just as you mentioned, on their Prime service.
Geeta, what does this mean for the other streamers? As you say, this is a pivotal moment. Is it the thin end of the wedge?
It is absolutely a pivotal moment, because I think all of the traditional media companies now really need to watch closely. They need to see how much engagement Amazon is having. Amazon has promised about 12 million, an audience about 12 million or so. That's what they've guaranteed their advertisers. We'll have to see if they're able to break that number. And really what it means is that more and more of these sports right packages are going to possibly go to these big tech giants. We already know that the Sunday ticket is up for grabs. We know that Amazon is looking at it very closely, as is Apple. And so basically in the next round of negotiations, all of these media companies have to be prepared to pay up, because otherwise they could lose very valuable rights to these sports properties and thereby lose an audience.
$66 billion. That's the total number for the U.S. TV advertising market. How much can streaming siphon off of that, and how much goes to Amazon?
So, this is $66 billion, of course, goes to all of the old media companies. They have been losing share. This was upwards of about $70 billion, so they have been gradually losing share. Yes, a lot of that is going to the streaming players now, whether it's a Hulu, whether, Netflix is going to come into the ad market. But it's going to be a slow build for all of them. Amazon already has a lot of the infrastructure in place. They have a captive audience. They have all of these different properties, whether it's a Fire TV, whether it's IMDb. whether it's Twitch. So really now what they really needed was that piece of marquee content for advertisers to be able to flip that switch. So we really think that this is a great way for them to kind of siphon off a lot of those TV ad dollars into the connected TV space, into the streaming space.
Geeta, really appreciate it. Great story. Geeta Ranganathan of Bloomberg Intelligence. Thanks very much. Sticking with sports, guys, you got the season kicking off tonight for the NFL, and tomorrow Bloomberg TV kicks off The Lineup. It's a brand new show focused on the world of sports betting. Joining us now is one of the hosts, Kaylee Lines. First of all, you're a big sports nerd, so this is really awesome and fun for you. But what's the show about? What are you going to teach me?
Well, obviously, I'm very excited, first of all, for NFL season finally upon us. I've been waiting 6 long months for this, but essentially I view this show as just an extension of what you and I already do every day, where we are trying to give people data and educate them so that they can place bets. Usually in financial markets, that's you want to go long or short, bet against a company, bet against a country even. And this is just bringing that to sports. So we have troves and troves of historical data from our partner Sports Radar that essentially just looks at bets over the course of history, the money line, over and under, spread, and looking at which ones historically have paid off the most so that when you are gearing up for a weekend of games, you know what bets you might want to place.
Alex, did you get all that? Do you understand all that? Are we good?
Sports. There's sports and there's money on the sports.
Money line, yeah.
This is what I'm getting. This is what I'm getting.
Okay. Alex Steele, massive sports fan. It's like
totally.
It's like
prime
light and dark
here.
In terms of the addressable market, how big is the sports betting market in the United States? Over here again, it's kind of referencing back to the UK.
Yeah.
Sports betting's been legal, long-standing here for really quite a while. It's a rapidly developing story in the States.
Yeah, I mean, it's 60 years of history in the UK, and it's just recent years of history here in the United States, and you still haven't seen the most of it. A lot of states have legalized sports betting recently, so that had a $57 billion market as of last year, the handle, which is essentially the total dollar amount spent on sports betting. This year, that handle could surpass $100 billion because of entrants like New York, and that's even without California and Texas coming online. So this is a massive, massive market, and the NFL specifically in fantasy football, along with it, is a huge deal in sports betting, and it's where a lot of these sports books like DraftKings and FanDuel make the bulk of their money. So we're going to be focusing heavily on football in the first episode this weekend.
I was going to say, okay, so first episode airs this weekend. What else are you most excited about? Crunching the numbers, yes, but what else?
I think Damien, my co-host, is probably the